Hello, I'm the fourth presenter, Yusuke Nakamura, and my topic is the influence that Bank of Japan brings to Japanese stock market. First of all, terminologies. ETF is an abbreviation of Exchange Traded Fund, which has several types of against indicators such as topics, Nikkei stock average, JPX Nikkei 400, and so on. ETF is the one description which contains a lot of individual stocks, and it's through a safer investment and a part of diversified investment. And what's happened? In the middle of March 2020, due to the highly dropped price of Japanese stock market by COVID-19, and Toyohiko Kuroda, who is the governor of Bank of Japan, who announced that central bank changed the purchase amount of ETF from 6 trillion yen to 12 trillion yen. And according to Nikkei News, Bank of Japan hold more than 6% of Japanese stock in the whole market, and it becomes major shareholder of more than 2,600 companies, which is 56% of Japanese company. And why did it happen? Bank of Japan increased the volume of buying ETF to coverage this chaos financial market caused by COVID-19 and for the economic stabilization and force potential impact to the market. And as a positive aspect, by the intervention of Bank of Japan, investors accelerate fear towards markets, eased and reduced the uncertainty in the near future is also decreased so that the stock market recovered rapidly. And as a negative aspect, even if Bank of Japan decreased the buying amount of ETF, they already have more than 6% in the total stock market. And they don't mention that when they will sell its ETF to the market. Therefore, investors have to be careful about what Bank of Japan's movement, and depending on how they sell, stock market's trend may influenced by BOJ in short term. And finally, in my opinion, when Bank of Japan believes stock market recovered enough and time to sell their huge amount of ETF, it will be the trigger for no trigger to change its trend for Nikkei 225 topics and JPX Nikkei 400. Even if Bank of Japan keep holding ETF and keep buying it gradually, which means the amount of raw stock will be gone because they seems not to sell in short term. Therefore, there's a risk for the investors who is buy and sell individual stocks because of the lower amount of stocks will have bigger amount of bigger amount to change the stock price. So that's all for my presentation. Thank you for listening, and these are the references.